Hi everyone. Sorry I'm late. Hi. I see some of you here already. Okay, hi. Hey, hi guys. Hope you guys can hear me. Yeah, sorry, I didn't mute myself when I was coughing earlier on. I'm a bit sick. That's why I was late because I overshot my last webinar because I was coughing so much. So bear with me. I will take a lot of breaks to cough. I didn't want to cancel because it's only 1 hour, right? So hi everyone. Thanks for tuning in and waiting, even though I started a bit late today. Okay, I'm gonna still try to end on time, which is at 4:30 Singapore time. By right, we should have started at 3:30 and end at 4:30. So I'm gonna try my best to end at 4:30. I'm gonna do this really quick then. So usually I will really slowly take my time and whatnot, but because I don't wanna delay you guys, I will be talking a bit faster. Okay, so hi everyone, welcome to today's webinar brought to you by IC Markets. Let's go straight into the disclaimer because we don't want to waste much time. Basically, the disclaimer is a reminder that whatever I share in this webinar should only be construed as educational. It is not any form of investment advice, financial advice, any form of advice for you to buy or sell. This is not a signals group. You are here to learn and see from the perspective of a different trader. Okay, I'm gonna have to stay here for a minute so that you guys can read through this. But basically, it's a reminder that this webinar is supposed to be educational. Again, guys, I'm not feeling very well. I'm coughing a lot. So in between, I might take like short breaks, like a minute or two to grab water or like to just to cough actually. All right. Bear with me. I will still try my best. Okay, go on. I'm listening. Thank you so much, Ferraris. Thank you so much, Muhammad. Thank you so much, Rob. Thanks for understanding. Take care. Get well soon. Thank you. I wish I can get well soon. I didn't want to cancel the webinar because I have already been sick for 3 weeks. If I cancel because I'm sick, then I wouldn't be working for 3 weeks. Okay, I think you guys should have enough times to have read through the disclaimer. Let me move on to introducing your host. So for those who don't already know me, my name is Cassandra. You guys can call me Cass. I am an investment analyst with Everest Fortune Group. We are a research firm based in Singapore. What we do here is a lot of research, back testing, a lot of forecasting, and understanding where the markets are going. Because I spend so much time on the markets, I am a it obviously if you spend so much time looking at something so much, you become very good at it, right? So because I look at the market so much, I spend so much researching on the market. I'm also a prop trader. For those who don't know what prop trading means, it means that I'm funded by multiple companies to trade their funds. How did I get this funding? I had to do 10% profit within a month to pass their test. And so 10% profit with for me is not that hard. I won't say it's easy either, but it's not that difficult. Okay, so I will show you exactly how I do my 10% profit a month by looking at the cheat sheet that by using the cheat sheet to get my analysis. Okay. Okay, cool. So again, don't want to spend too much time on introduction. Our agenda for today is to go into the live charts, to understand the key approaches on the live charts, and to apply the cheat sheet checklist. So this is the cheat sheet checklist. I am going to start explaining how I use this, but in the meantime, please take a photo. If you want to use this into your own trading, you want to implement this into your own trading, please take a photo. Okay, cool. I'm gonna continue. So just to be 100% clear, everyone has their own different styles of trading. Some people only trade sideways markets, some people only trade the news, some people only trade, etc., right? My style of trading is purely trend. Okay, I am a trend trader. That means I need to know if price is going up or if price is going down. Okay, and then I catch the small moves when it is moving up or down. So when it is moving up, obviously I'm going to go in for a buy. When it's moving down, I am going to go in for a sell, right? That's easy to understand. It's simple. Okay, so when it is moving up, I'm basically using a trend line or channel to narrow down where the price movement is going to be. And then I'm going to use horizontal levels to look for my pullback, overlap, swing high, swing low, plus Fibonacci levels to look for my entry, stop loss, and take profit. Okay, so once this is done, I will then see if there's any more chart patterns, which is examples are wedges, triangles, double tops, double bottom, any death or golden cross, meaning that I will use the moving average to see where price is going, whether it's an uptrend or a downtrend. If no death or golden cross, then I will use natural moving average, stochastics and RSI to look for bounces and divergences, if any, and any kind of correlation. So correlation means that let's say I want to get in for euro for a buy, right? I want to get in to euro for a buy. That means I'm ultimately expecting euro to go up in price, and I'm expecting the US dollar to drop in price. So example is EUR USD. Okay, so if you're expecting the US dollar to drop in price so that you can buy the Euro USD, it means that you are also expecting the DXY, which is the USD dollar index, DXY, to drop in price, because this index is what tracks the movement of the US dollar. Okay, so once I'm done with all of this, I will have a rough idea whether I'm going for a reversal or a breakout. Okay, that's basically the entire cheat sheet. I'm going to clear this in case you want to take another photo. If not, I'm just going to stay here for like 10 seconds. Cool, everyone good? Okay, go on. Thank you for staying through the introduction. Let me pull out TradingView. Give me a moment, guys. Give me like 1 minute. Okay, cool. Can you guys let me know in the chat box if you can see my TradingView screen? Okay, this worked out beautifully. I think I was like at 100% win rate last week. So every single week, I will go through 3 charts with you guys, which the first one is a Forex chart, which is EUR USD. Okay, sorry guys. Okay, which is EUR USD, and then one ETH USD. I have been coughing for so long. I think I have bronchitis or something, or like TB. It's so terrible. Okay, so EUR USD, which is a forex pair, ETH USD, which is a cryptocurrency pair, and oh, on the dot. Okay, nice. And gold. Okay. So this was the 3 charts that I charted last week. Oh, looking good, honestly. Okay, let's start with euro. So Euro, every week, I will start the webinar by reviewing what happened last week, okay? Because when we review, then we know what we did right and what we did wrong. Okay, so I'm pulling out the Euro chart and I set to sell here. I said sell here, right? Sell entry. Look, these webinars are recorded. So even if I want to lie to you guys, even if I want to like make up an analysis that didn't happen, it's not possible because it's recorded. So I cannot cheat. I cannot cheat. So this was exactly what I did for you guys last week. I took you guys last week, which was the 25th of February. And I said, if price breaks up here, I remember this so clearly, then there is a good chance it's going to drop to the take profit. Okay. And I said, your stop loss can be right slightly above here. I don't know where anyone put the stop loss. I didn't trade. I haven't been trading for a while because I'm sick. I don't trade when I'm sick because when I'm sick, you need to know, you need to make rules for yourself. So I don't trade when I'm sick because when I am sick, I don't make very good decisions. Okay? I am coughing a lot. I'm having fever. My brain is not working very well. So I don't trade during this period in case I make a bad decision. Okay? But I will still do this analysis every single week. Okay? I do this analysis every single week to see if I was correct or not. Okay, so if I had gone into this trade last week, right? If I had gone to this trade last week, sorry, give me a moment, guys. I just got a notification from Zoom. Okay, no. Okay, forget it. Okay. Then this would have been a really good trade of, let's see, short position. Let's say you put your stop loss somewhere around that yellow line there. It's a 2.8 trade. I think that's a really good trade. So what does 2.8 mean? It means that if I have a $100,000 account, right, and I'm only risking 1% to enter a trade, that means I'm only risking 1%, right? So if I lose, I'm only risking $1,000, sorry. If I lose, the most that I can lose is $1,000. But if I win, the risk to reward ratio is 2.81. That means if I win this trade, I win 2.81%, which is the equivalent to I win 2.81%, which is the equivalent to 2.81 thousand, okay? $2,810. Okay, so this is a very good risk to reward trade. This is a very good setup. Okay, so this one we've got 1 out of 3 correct. Let's look at the second one. Okay, so for EUR/USD, I gave the exact same analysis. EUR/USD, I said if price breaks here, it needs to break. Okay, if it doesn't break, then it's not counted. Okay, if it doesn't break, it's not counted. It needs to break. So in this case, EUR/USD, there was no trade because price did not break. Okay, so this is a 1 out of 3, and then I won't say this is a loss. Okay, this is not a loss, but this is a no entry trade. So in this case, I would say we only had 2 possible trade setups. So 1 out of 2 possible trades that were correct. Hey, let's look at gold. Okay, gold, I said if price pulls back, it needs to pull back. Oh, sorry, I didn't say if it pull back. I said if it breaks out, actually. I said that's 2 possible scenario. The first one, my bias is that it's the green one, which is the green arrow. So if price pulls back to this line here, you can enter and go in for a buy. Alternatively, which is the purple arrow, I said that if price makes a breakout here, then the purple arrow will continue up to the take profit. So this one worked out and now it even pulled back. It even pulled back to this zone here. So actually there was two trades. So last week, I would say 2 out of 2 successful trades. This is basically 100% win rate, right? This is not counted because there's no entry. If there's no entry, means there's no way for you to win and there's no way for you to lose. Therefore, out of 3 analysis, 1 didn't have entry and 2 had entry and 2 worked out. Okay, so let's say you had gotten in, let's say I had gotten into this trade. I didn't get in again because I'm sick. Take profit is here. Okay, for those, can you use the replay button? Okay, sure. Thanks for asking. Okay, so we were here last week, and I said it could either be the green arrow or the purple. Okay, in this case, it ended up being the purple, and take profit was hit. Okay, so if I would have gotten into this, this is my stop loss would have been somewhere around here. Okay, so this is a 1 to 2.5 kind of trade. Okay, 1 to 2.5 trade setup. Okay, that means, I mean, it really depends on where I put my stop loss. I think I wouldn't have put it so tight. Okay, so, but it's somewhere between 1 to 2.5. That means, again, if I had $100,000 account, if I have $100,000 account, I risk 1,000 for this trade. So the maximum I can lose is $1,000. But if I win this trade, I win 2.5K. Okay, you see how important risk to reward is? Risk to reward is super duper important. Okay, you cannot, please don't take risk to reward for granted. Okay, so now that is done. Let's start for this week's analysis. I got about half an hour left with you guys, and then I do have to go. Okay, so my analysis last week for euro was sell. Okay, if I'm being very honest, I would like to believe that it's going to be a sell all the way. Okay, why? Because first, remember, like I said in the beginning of the webinar, I am a trend trader. So direction is very important to me. As we go on the weekly time frame, you can see price is clearly moving in a downtrend, right? It is clearly moving in a downtrend. Even if this is not a very beautifully drawn downtrend, but it is still moving in a downtrend. So if I pull out a channel, you will see that price is just nicely respecting this channel, okay? Do you guys see that? See, it was here at the bottom of the channel. It came back up, didn't reach the bottom, came back up again, came down, and then now it's at the top of the channel again. So we're expecting it to reverse. I mean, if price decides to respect this channel. But obviously, because we are on the weekly time frame, anything could still happen. It is too huge of a time frame to decide on the short term. Okay, but ideally, the idea is that it is on the short term. I would like to believe that it's in the short term, especially with what is happening in the world. So when we combine fundamental analysis with technical analysis, our probability of our setup becomes very high. Okay, it becomes very high. Why? Because if I'm combining information that I have on the news, on the markets, economy, microeconomy, it will help my technical analysis become very high probability. So I do think the euro is dropping in price. Why? Because of what happened last weekend. I think we are all aware that US and Israel attacked Iran over the weekend, and therefore oil prices is going up. And because there's uncertainty, you guys know that. Can you send this presentation to my email? Oh, okay. Hi, Ferraris. Thanks for asking. You need to email IC Markets because I don't know if you remember this. Okay, so oh, sorry. Wrong one. Basically, I am invited by IC Markets to do these webinars for you guys. I'm not actually from IC Markets. Okay, so I don't have access to their back end thing. So when this is recorded, um, it will be recorded onto the IC Markets Zoom, and I don't have access to their Zoom backend. Okay, so you need to email IC Markets directly to ask for the presentation, yours, and they will email it to you. Right, because I'm from Everest Fortune Group, which is a research firm. So IC Market invites us every single week to do this educational webinars for you guys. Okay, so I actually cannot access the recording. But yeah, so anything regarding IC Markets or anything back end, please ask them directly. But yes, thanks for asking so that now everyone knows. Okay, so let's go to the daily. Okay, so on the daily, you see how it's contradictory? Because on the weekly, price is moving on a downtrend, right? It is a clear downtrend. Price has been moving in this downtrend for like the longest time, right? For the longest time, price is moving in this downtrend for EUR USD. Okay, so let's see on the daily. You see on the daily, it looks like it's contradictory. It looks like it's contradictory. I say looks because it is only a look. Because if we go on a daily time frame, you can see that price is moving up, right? You can see how price is moving up. If I pull out a channel, I'll probably be able to pull out a very, very nice channel. Not here. Okay, there seems to be a breakout already. Okay. I'll pull out a very special. Why does it look contradictory? Why is it on the bigger time frame, it's moving on a downtrend, but on the smaller time frame, it's moving up? Because you need to remember this, okay? Price is constantly moving in a zigzag pattern. Okay, price is constantly moving in a zigzag pattern. So even though on the smaller time frame, price is moving up, it is just moving up to that pullback. Once it has reached a peak, it will then pull back down in the correct direction again. So in my opinion, the correct direction for EUR USD is actually downtrend because we zoom out and we see on the weekly look at this. From year 2007, 2008, February 2008, price has just been going down in a steady downtrend. Okay. Price has been moving on a downtrend for almost 20 years for the EUR USD. Okay. So whenever it does a pull up, whenever it's moving up, it is just a pullback of price. It is just price pulling back. Okay. So do not be confused. Don't think that it is a trend reversal on the entire big picture. It could be a trend reversal right now because it's just pulling back. Okay, so anyways, even if it is just a pullback or whatever, right? See, if I pull out the trend line, there's already a breakout happening here. There's a breakout. You see this? Price is moving nicely on this trend line, and then it finally broke out here. Okay, so the question is, now that it has broken out, does it mean that price is going to drop from here? Not yet. Okay, we do not want to jump into conclusion because if you jump into conclusions in trading, you are going to end up burned. Okay, you are going to end up losing money. You are going to end up hurting yourself. Okay, you're going to drown. Okay, so instead of assuming that we have started on a downtrend, we need further confirmation. Okay, so first thing first, the US dollar is going to go up in price. Okay, so I'm going to pull out the DXY. DXY, US dollar index. Okay, this chart is what charts the movement of the US dollar. Okay, so if you look at this chart on the weekly time frame, on the long term, it's actually moving on an uptrend. Okay, it is actually moving on an uptrend, which is which is there is correlation. Okay, so right now it's showing you the exact same thing as the euro. Oh my gosh, I don't know when I'm ever gonna get better. Okay, anyways. Okay, right now, the breakout hasn't happened on the XY. So if I pull out a trend line, right, it kind of looks like it's still respecting the trend line. So what I want to see on DXY is like price breaks out here. That will give me even more confirmation that there is weakness, there is strength on the US dollar. Okay, right now it's kind of like we're in a uncertain period of is it gonna happen, is it not gonna happen kind of period. Okay, so it's a question mark kind of period right now. So you don't assume because if you assume, you're gonna end up burned. Okay, let the markets show you what it wants to show you. Let the markets guide you. Okay, let the charts guide you. So right now, I need further confirmation. Okay, what confirmation do I need? I need price to break out. Okay. Okay, so I'm gonna pull out the cheat sheet so that you guys are not completely confused. Where is my cheat sheet? Okay, there you go. So what we're gonna do is horizontal lines, trend lines, channels, right? And any chart patterns. Okay, so let's go back to the charts. We're looking for horizontal lines, which is what I've already drawn out. I'm gonna go down to the smaller time frame to look for horizontal lines. The next horizontal line is here. The charts is showing that it is a breakout. The trend line is showing that it's a breakout, right? Price is moving in a very nice trend line, and then it had broken out. Okay, let's go back to the cheat sheet. I need any chart patterns. Do you guys see any chart patterns? I don't see any chart pattern. Head and shoulder, teacups, double top, double bottom. Nope, I don't see any chart patterns. So let's move on to the next one, which is death and golden cross or any natural moving average. Okay, death and golden cross, you're gonna pull out the 50 and the 200 moving average. I'm gonna get rid of this. Look, the thing about indicators is that it doesn't work 100% of the time. Indicators are there to help you make a decision, but if it's not working, don't use it. How do I know that the indicator is not working? Because the green is crossing the white and it's crossing the white again, and it's crossing the white again, it's crossing the white again. So the green, which is the 50 moving average, is constantly crossing the 200 moving average. So it's not really respecting the movement of price. I'll give you an example of when the moving average is working very well. It works very well on trending markets. Okay, this is a very good example here. So you see how the green crosses the white? Whenever the green is above the white, it's an indication that price is on an uptrend. You see, the green crosses the white and price just shoots up. It shoots up, it keeps shooting up, it keeps shooting up. Oh, sorry. It keeps shooting up until the green crosses the white again. The green crosses the white onto the downside, and that is your signal to get out of that uptrend because that is a signal that the possibility that the uptrend has ended. Okay? So in this case, you can see the green constantly passing the white. It crosses the white into the upside, and then it crosses the white into the downside. It crosses the up white again, and then it crosses the white again. Okay, so this indicator is not giving us accurate information, therefore we should not use it. Remember, guys, indicators, you go in, there's so many indicators. There's hundreds and hundreds of indicators, okay? And people are constantly creating more indicators on a daily basis. There is no single indicator out there that works 100% of the time. Therefore, you should not use the indicator all the time. You only use it when it's working. So in this case, I don't think it's working because it keeps going zigzag, okay? So yeah, stuck with just using horizontal levels and Fibonacci levels. Okay, so let's pull out stochastics RSIs to see if we have anything. Stochastics, for years, I've been using 21, 5, and 3 for the settings. What am I doing right now? I'm looking for divergence. Divergence means that on the chart, price is moving down. If on the oscillator it's moving up, it means that the oscillator is trying to tell me that there's a trend reversal. Okay, no divergence, no support and resistance. In fact, price has reached like a low. Okay. I would say there's a lot of uncertainty with EUR USD. It's not as clear as last week. Okay, so we're back to square one again, where I need a breakout. Okay, I need confirmation. If price manages to break this structure here, which is the last swing low, there's a very good chance it's going to reach to the next zone, which is here, right? So this case, we will have no choice but to scalp, right? This will not be a long trade. It will be a short trade. This is my email. Take note, I have few thousand email, so there's a good chance I'm gonna miss your message. But again, anything you need, just email IC Markets. Okay, guys, I'm so sorry. I just need like a 1 minute to 2 minutes break. I'm coughing a lot. I just need to use the toilet really quick. Guys, I'm back. So sorry. I'm yeah, it's not easy being sick. Okay, where was I? So I need price to break out, and then I get in for a scalp. How do I get in a scalp? You can go to the smaller time frames. It'll be better if you use the smaller time frames. So I need it to break the zone. Needs to break here, and then I expect price to go a bit low. Okay, so let me just put a note of what I think is going to happen. Sell entry provided it breaks. Okay, provided it breaks. It means that it needs to close below the blue zone. It needs to close below the blue zone. Take note that we're in a very uncertain period for URUSD. I won't say it's uncertain. I'm saying I think it's a downtrend, but we need more confirmation. So we need more things to confirm that it's a downtrend. Because if it's truly a downtrend, why did price reject here? Right? There was a bit of rejection happening here. So right, I need it to break out for me to confirm that it's a downtrend, and then I'll aim for the next zone. Okay? So I'll aim for the next zone, which is 1.149. 1.1145, I think that will be a better zone because psychologically, traders and people are attracted to round numbers. Okay, so 1.15 is my next aim, provided price breaks out. Okay, provided price breaks out this sell level here. Okay, so yeah, so when I say breakout, it means that a candle needs to form below this blue zone and it needs to close below the blue zone, and then you aim to get in as close as possible to the sell entry. Where do you put your stop loss? That's the thing about breakouts, right? The breakout has to happen first before you decide where to put your stop loss. You usually put it above the last candle, okay, for breakouts. Okay, so let's move on to the next one. Okay, ETH USD. Why we needed to wait for confirmation is because for the longest time, since the 6th of February, so almost 1 month, actually, it's been 1 month, since the 6th of February until now, you can see price is just moving sideways. Okay, so when it's moving sideways means that it doesn't know what to do, right? It doesn't know what to do. It's kind of moving in a triangle, actually. Or even if it's not a triangle, it's a rectangle. Okay, on the very least, it's a rectangle. I don't, okay, fundamentally, because of what happened over the weekend, because of the Iran, Israel, US thing happening, the war happening in the Middle East, I don't think that crypto can surge at this current point of time because crypto, if you guys know fundamental analysis, you know that cryptocurrency is considered a, to majority of people, cryptocurrency is considered a risky asset. So during times of war, during times of uncertainty, people don't put their money into risky assets. They put their money into safe haven assets. So what are safe haven assets? US dollar, Japanese yen, XAU US gold. Okay, these are all the safe haven assets. Cryptocurrency, Bitcoin, Ethereum, these are all considered a little bit more risky. So during war, when it's uncertainty, why would I be putting my money into something so risky? Why don't I put my money elsewhere? Therefore, I cannot imagine you Ethereum and Bitcoin at this current point of time to be rallying, okay? Because the market's condition will not allow it. Okay, the market conditions at this current point of time is not ideal. Okay, so I've narrowed down where exactly price is moving. Price has been moving within this green box. Okay, this green rectangle. Let's kind of narrow it down. Even if we cannot play a breakout, okay, let's try to narrow down a triangle. Okay, so if price breaks either end of that triangle, the next place that it's going to go would most likely be one of the green box. So another scalping trade, okay? If you guys have been following me for a long time, you know that I don't like to scalp because scalping would require you to sit on the in front of the computer a little bit more, okay? I don't want to sit in front of a computer because I like to get into my trade once a week and then I'm done. Anyways, I'm still sick, so I won't be trading. I'm just doing an analysis for the sake of education, okay? So in the event price breaks either end of the triangle, I'm thinking price is gonna head to this green zone or this green zone here. So it's gonna be either one of it. That means the buy or sell entry can be either end of the triangle, and then it's gonna be a short scalping trade. So okay, I say green zone, but I drew a line, but it's actually a zone. Okay, it's always a zone. Please remember, price always moves to zones. Okay, it's not like price doesn't just move in a single area. Okay, I'm narrowing the zone. So it's either one of each, but it's still, even though these are very small trades, right? These are very short trades, but if you are scalping, it would still give you sustainable profits. Okay, these are for scalpers. I'm gonna write a note here. I'm gonna write a note here so that next week when we come, then when we come back to the charts, we can reference and see what went right and what went wrong. Okay. Oh, I ran out of water. Okay. Next one will be XLU USD. Obviously it's a good buy because of what's happening in the Middle East. Okay, I do expect it to make newer highs. Is it gonna make the new high today? I don't know, but I know eventually it's gonna make a new high. So price is constantly moving in a zigzag pattern, right? It may not be a very beautiful zigzag pattern, but it's a zigzag pattern. So why do I keep emphasizing this? Because, okay, if price is moving in a zigzag pattern, right? Where's the colors? Okay, there. If price is constantly moving in a zigzag pattern, your aim as a trader is so simple. You need to identify where the zigzag is going to stop. You need to identify when it pulls back, it moves up. When it pulls back, where is it going to pull back to and when is it going to stop? And that's where you enter for a bounce. Okay, so if I can identify that price is going to stop here, for example, that means this is going to be my buy entry. Okay. If I can identify that price is going to stop here, then this is going to be my buy entry, right? So it's very simple. That's my entire style of trading. Okay. Ultimately, I really like playing pullbacks. I don't really like playing breakouts, but I don't like playing breakouts, right? But sometimes I go into the charts and there's no choice. I cannot force the chart to do what I want it to do. In this case, I really need to wait for a breakout because price is moving in a triangle. Okay, for XAUUSD, I'm going to look for a pullback. So how do I look for a pullback? I know price is going on an uptrend. I am confident that price is going on an uptrend. I just need to know where is it going to pull back to, and then that's where I enter for my buy. Right? It needs to pull back to somewhere. Price cannot just shoot up in one direction because it doesn't shoot up in one direction. It needs to pull back. So in the event it pulls back, where is it going to pull back to? So let me pull out some Fibonacci levels to make it make sense. Okay, there's a level here, there's some levels here. What am I doing essentially? I'm looking for Fibonacci levels that lines up exactly where the horizontal levels are lining up. Nope. Nope, as in that's not giving me good level. I mean, give me a moment, guys. Trying to see if there's any levels that make sense. Okay, I think I found something. You see how there's a cluster of the green, the gold, and the blue all clustering in one zone? That's where price will likely pull back to. And when price gets there, that's where I will likely get in for my entry. Okay? So the cluster is right here. I'm going into the cluster, which is exactly where the horizontal levels are. Okay? So this is where the cluster is. If price pulls back here, that's where I will consider getting in for myself. Hold on, guys. Should be a 78.6. Yes, it is a 78.6. Okay. Yeah. So I have a strong feeling. Okay. It's not even just a feeling, it's because the indicators are showing me. Price is going to pull back somewhere within this green box, but more specifically within the red box. Okay. I think price is going to pull back here. Price is going to pull back here. And then from here, can enter for a buy. Buy to where? Buy back to the swing high. Okay, we never aim, we are never ambitious. Okay, because in trading, you don't win one time. Okay, you're supposed to win consistently, many, many times consistently. Okay, if your aim is only to win one time, that's not trading, that's gambling. You might as well go to the casino, you might as well win the lottery one time, and that's all you need, right? But for trading, you are winning consistently many, many times. Therefore, we are only aiming for small wins, okay? So if price pulls back here, where is it? Buy entry, my stop loss is somewhere below. Okay. Okay, so that's all I have for you guys today. Thanks for tuning in. Those are three charts as promised. I will catch you guys in a week. Okay, and then in a week we will review what went right, what went wrong. Okay. So thanks guys. Take care. Bye everyone. Thanks for tuning in. Bye.